In 20 years of professional investing, I don't think I've ever seen a company more misunderstood than MicroStrategy, aka Strategy. It is the ultimate magnet for bad takes. Critics will say that Strategy is a Ponzi headed for bankruptcy. Meanwhile, the rabid fans call it an infinite money glitch that'll one day become the largest company in the world. Well, today we're going to cut through all that BS and FUD. We're going to uncover the truth about Strategy's future, and I'll even give you some insight into how I'm personally investing in the digital asset treasury space. So let's dive right in. Unfortunately, we live in a world now where facts can be hard to distinguish from misinformation, AI slop, and straight-up lies. And a lot of retail investors get their financial news and information now from social media, which is pretty much the worst place to find the ground truth for public companies. Now, don't get me wrong, I do use social media as a tool for idea generation and as a sentiment gauge, but it's got severe drawbacks. For example, just look at some of the hot takes lately here on Strategy, which are just so bad and flat out wrong in many cases. We've got a bunch of people out there claiming that Strategy is a Ponzi scheme. We've got YouTubers with huge audiences claiming that Strategy will soon be forced to liquidate all their Bitcoin, and we even have doomers shouting that the business is on the verge of collapse. And I'm going to disprove all these claims shortly. But with public companies, we have a much better source of truth, SEC filings. We've not only got detailed quarterly and annual reports with full financial statements and detailed explanations, but we also get filings when some new material event occurs. On top of that, companies like Strategy also have detailed investor presentations and investor relations websites. I always tell my students, just go straight to these primary sources. Don't rely on social media chatter. Unfortunately, though, most investors just don't seem to want to do even the most basic research to learn the truth for themselves. But at least you can always count on me, the Stock Geek, to do the actual work and help you navigate through it all. Let's start with an overview of Strategy's financial position today. And as you probably know, their core business at Strategy is to acquire and hold as much Bitcoin as possible. It's not that dissimilar from, say, a real estate fund whose goal is to acquire real estate, and they hope that the real estate value will appreciate over time. They're hoping to rent some of that real estate out for income, and they're trying to acquire as much as they can. And the difference, of course, with Strategy is they're not focused on real estate. They're focused on acquiring Bitcoin because they believe it will gain in value over time. Now, one key difference, of course, also is that Bitcoin is more latent than real estate. It's not really generating income or a yield today for Strategy, although that could change in the future. But Strategy has been quite successful at acquiring Bitcoin over time, especially in the last 2 years. They now hold 650,000 Bitcoin, which at the prices here today in early December is worth about $58 billion. This is a slide, by the way, from MicroStrategy's or Strategy's investor presentation, the most recent one that they have on their investor relations site. If you scroll down a couple slides, you'll see that the value of the Bitcoin even today dwarfs the value of the convertible debt and preferred equity they have outstanding. So when we think about how Strategy's been able to accumulate all this Bitcoin, there's basically three main sources or three main buckets of funding: selling MSTR common stock, selling new debt, and selling new preferred stock. And preferred stock is kind of a hybrid between equity and debt, and we can talk about that more here shortly. But you also don't have to trust the investor presentation. You can actually go look and find more detail about all this in the actual financial statements, right? I keep saying go to the source, don't rely on other people. It's very, very easy to open up the quarterly financial statements. We have this one from Q3, which is the most recent full set of financial statements we have for MicroStrategy. It's going to be a little bit out of date now that we're in December, but this is the most recent one we have. Numbers in thousands, by the way, so add 3 zeros to these. But basically, you can see on the asset side of the balance sheet, they had $54 million in cash at the end of the third quarter, and they had digital assets that were worth $73 billion. Now, why is that 73 versus the 58 I just talked about? Well, Bitcoin prices were higher on September 30th at the end of the third quarter, so that's why the value has dropped since. But you can see the value of the assets here, and the value of the digital assets, aka Bitcoin, is the vast majority of the value of the total assets in the business. And when we look at the liability side, we see about $8.2 billion of long-term debt. We also see mezzanine equity, which is another name for preferred equity, of just under $6 billion. Now, again, today that's closer to $8 billion since they've raised some more preferred stock since the end of the third quarter. But basically, this was the snapshot as of the end of September. And you can also see that stockholders' equity, aka book value of equity, was about $52 billion. So this massive amount of Bitcoin they hold on the asset side of the balance sheet is supported by a little bit of debt, a little bit of preferred stock, and a majority by the equity of MSTR that they've sold into the market over time. And so, you know, we can already dispel tweets and people who say that the value of Strategy's Bitcoin has fallen below the value of their debt. That's just, frankly, just obviously not true. And you can look at either slides like this from the site, or you can look at the actual financial statements to disprove that immediately. The Bitcoin value, even though it's dropped in the last couple of months, is certainly well above the value of the debt and the preferred equity. And I saw tweets like this that got 5,000 likes, which is just crazy, where they said that Strategy raised almost $20 billion in the first 9 months of 2025. That money did not go to new Bitcoin purchases. It went to service the debt from previous capital raises. Well, we can disprove that immediately as well. When we look at the income statement, you can see that the interest expense on the debt was only like $54 million through the first 9 months of the year. Dividends on preferred stock was only about $200 million. So call it $250 million of obligations or debt service and preferred service through the first 9 months of the year. That is so small relative to the Bitcoin that they hold, and also very, very small relative to the capital they raised, which if we go to the cash flow statement, you can see they did buy $19.38 billion worth of Bitcoin through the first 9 months of the year. So it did not go to debt service, which was tiny. It went to buying Bitcoin. Now, how did they fund all the purchases of that $19+ billion of Bitcoin? Well, they issued $2 billion of debt. They issued almost $6 billion of preferred stock, and they issued almost $12 billion of common stock. And we're going to talk about why they did that. But here, you can just look at a cash flow statement, you can look at a balance sheet, and you can immediately dispel these people who are out there just saying these asinine things. And so, I have actually created a spreadsheet for myself to calculate what the Bitcoin value is in real time. I also have information here on MicroStrategy's debt, that $8.2 billion of debt, the preferred stock they've got, and I can calculate in real time what the net value of their Bitcoin is worth. So taking the market value of the Bitcoin at today's Bitcoin prices, subtracting the amount of debt and preferred stock that they have, and the amount of Bitcoin value in excess of the preferreds and the convertible debt today is like over $40 billion. So there's really no issue there in terms of the value covering the debt and the preferreds. Of course, there are questions about, well, what happens if the value of the Bitcoin falls below those levels? What if Bitcoin goes to 5,000 or 10,000? Then what happens? Or could MicroStrategy be forced to sell some of its Bitcoin to pay off this debt or preferred stock? And so we're going to address that here in a minute as well. But you can also, by the way, go look for yourself on Strategy's homepage at their own dashboard, which has basically a lot of these same figures that I put in my own spreadsheet. In real time, you can see what the market cap of the company looks like. You can see what all the debt that they've raised looks like in terms of the total amount raised. All of the details there that I've also included in my spreadsheet. And of course, they have some of these other figures as well, like NAV, which we're going to talk about, and they have information on the preferred stock that they have sold into the market. And so this is all very easily available. You don't have to rely on stupid comments and social media. You can just go check these numbers for yourselves, and we're going to walk through some of the implications of this here in a second. So we've been able to disprove some pretty boneheaded bearish narratives just by looking at a balance sheet or Strategy's own investor relations website. But you might be looking at the stock chart of Strategy and saying, something's still going on here. It can't all just be FUD, because the stock is down almost 40% year to date. And just in the last 3 months, Strategy stock is down almost 50%. And typically, I would look at a company's earnings trajectory to try to figure out what's going on behind a stock slide. But MicroStrategy's earnings figures are pretty volatile and fairly meaningless. And let me show you what I mean. In Q1 of 2025, Strategy posted a hugely negative earnings number, but in Q2 and Q3, they reported nicely positive earnings numbers. So they're pretty much all over the place. And what is happening here? Well, basically, the core Bitcoin accumulation business doesn't really have a steady income stream that it's generating, at least not today. And Strategy's legacy software business does kick off a few $100 million of gross profit a year, but most of that gets eaten up by corporate overhead expenses. So what is driving these huge moves in the earnings numbers? Well, it's basically the mark-to-market value of Strategy's Bitcoin on the balance sheet. So each quarter, at the end of each quarter, Strategy has to take the number of Bitcoin it owns, multiply it by the current Bitcoin price, and look at the change in value from the prior quarter. And that change, either the gain or the loss, is flowing down into net income and earnings per share. And that's causing it to be either hugely negative in quarters where the Bitcoin price has gone down from the prior quarter, or hugely positive when Bitcoin price rises from the prior quarter. So Strategy isn't actually realizing any of these gains or losses. These are just accounting mark-to-market figures that fluctuate quite a lot. And so if you're trying to value Strategy using a traditional price to earnings multiple and trying to forecast earnings, it's kind of a fool's errand, because who knows what Bitcoin price is going to look like in 1, 2, 3, 4 quarters. If you can perfectly forecast Bitcoin prices in the quarters ahead, let me know. I'll invest in your fund, but I don't know anybody that can yet do that with full accuracy. So what do we use to try to figure out how the market is valuing Strategy? Well, we often look at what's called a multiple to net asset value, or mNAV. Well, what is net asset value? Well, if you think about all the Bitcoin that Strategy owns, shareholders of MSTR don't have claims to all of it, because Strategy has sold convertible debt and they've sold preferred stock, which come ahead of the common stock when it comes to capital structure. And so The equity holders really want to focus on the net Bitcoin. When you take the total Bitcoin value, subtract debt, subtract preferred stock, that's what's left over for equity holders. And I calculate that here in my own spreadsheet, but you can also see these numbers on Strategy's dashboards as well. But basically, I take the Bitcoin owned, multiply by the Bitcoin price. That gives us the total Bitcoin value. Then we subtract the convertible debt principal and the preferred stock to get us to a net value of the Bitcoin that's relevant to equity holders. Then we can take the current market cap of the stock at current prices and divide by that net asset value to come to the current multiple of net asset value that Strategy is trading at. And as you can see here, Strategy has this great slide from their investor deck showing the trend of the mNAV multiple over the last year or so, and it's been trending down. So that has been a headwind for Strategy, in fact, a major headwind. So even though Bitcoin's price has trended down lately, the mNAV multiple trending down has really been the second part of that headwind. In bullish markets, where investors are really optimistic about Strategy and optimistic about the financial engineering, but also the price of Bitcoin, well, basically investors are willing to give it a much higher mNAV multiple, or they have in the past. In late 2024, Strategy traded at almost a 3 times multiple of the underlying net asset value that it held on its balance sheet. So this is very reflexive. In bullish markets, you'll see not only Bitcoin price trending up, but the mNAV multiple trending up. And in bearish markets, it's the opposite. It becomes a dual headwind. Kind of like with a traditional company, when earnings are rising and the PE multiple is expanding, you get a dual tailwind that helps your stock gains. But in this case, obviously, it's working against Strategy at the moment. Now, I see a lot of people getting the basic calculations of NAV and mNAV wrong, which is funny because it's not a difficult calculation. But you have people like this on X who have more than 1 million followers who were freaking out a couple weeks ago saying Strategy's market cap is now 10 billion below the value of its Bitcoin holdings. Well, you forgot about the debt. You forgot about the preferred stock. They did a follow-up tweet where they actually did subtract the debt from the total Bitcoin holdings, but then they completely forgot about the preferred stock, the almost $8 billion of preferred stock. I also saw a big YouTuber here with more than 1 million subscribers shorting the stock and telling his followers that Strategy would be forced to sell their Bitcoin to pay off debt because mNAV had fallen below 1. Well, guess what? mNAV has not fallen below 1 in the current cycle. And not only that, Strategy would not be forced to sell any Bitcoin even if mNAV did dip below 1. And in fact, in prior bear cycles a few years back, Strategy's mNAV multiple did fall below 1, and they were not forced to fire sale their Bitcoin like they're some margined trader. That's not how it works. So we'll talk a little bit more about capital structure here in a minute, and I'll show you why there isn't a trigger in the debt documents that forces MicroStrategy to sell Bitcoin when mNAV falls below 1. But even if there was such a trigger, I showed you earlier the value of the Bitcoin collateral that Strategy owns is well in excess of both debt and preferred stock that Strategy has sold. So it wouldn't be an issue even if they did have to sell Bitcoin. Obviously, it wouldn't be great optics for the market if they did, but there is no trigger in the debt documents anyway. So we'll put all that aside for now until we talk a little bit more about capital structure. But how should we think about this mNAV multiple? How should we think about the multiple that Strategy should trade at as a multiple of its current net asset value or net Bitcoin value? Well, if we think about traditional banks, JP Morgan, Wells Fargo, Bank of America, and even smaller banks, they often trade on what is known as the price to book multiple or price to tangible book multiple. These are asset heavy companies as well with leveraged balance sheets. And the really good banks, the ones that are less risky and prove over time that they have high returns on equity and can generate value for shareholders over time, those tend to trade at high price to book or price to tangible book multiples. So JP Morgan Chase might trade at 2 times or even higher than 2 times price to book, whereas smaller, crappier, more risky banks might trade for 1 times book or even less. So that is similar to MicroStrategy in some ways, and we could actually look at formulas like this one from the Gordon growth model from finance textbooks, which tell us if you have the inputs of return on equity, earnings growth rates, and discount rates, will tell you what the price to book multiple should be for the company. And you can use whatever inputs you want here to make this calculation. But, really for Strategy does come down to a couple factors. One, it comes down to what you think Bitcoin price is going to do over time. If you think Bitcoin price rises a lot in value over the next few years, and, you're very bullish Bitcoin, then you're probably willing to give Strategy a higher multiple of NAV. Strategy is also not an ETF that should trade at 1 times NAV because it does use financial engineering and financial levers to try to create additional value and create and accumulate more Bitcoin for shareholders over time. So when mNAV is high, what Strategy does is they go out and they sell fresh stock and it does create shareholder dilution. It creates more shares, but that capital is then used to buy Bitcoin. And if the value of Bitcoin on the balance sheet goes up a lot over time, then that trade-off is actually accretive or value add for shareholders. And so that's something that can actually add per share value for equity holders over time. And shareholders might be willing to give Strategy a higher mNAV multiple if they believe that to be the case. So you really have to believe two things. You have to believe that Strategy's financial engineering is going to work to deliver more value for shareholders over time, and you probably have to be bullish on the underlying Bitcoin asset itself. And if you are, then there is an argument to be made for higher than 1 and maybe even significantly higher than 1 times mNAV multiples. So I'll show you some scenarios here in a few minutes, looking at different mNAV multiples and different Bitcoin prices to come up with a stock price assumption for Strategy. But I do want to dive into the capital structure here for a minute to just show you and prove to you that there is no trigger or forced liquidation that's going to happen with MicroStrategy. I said earlier, I'll say it again, we should always go to the source documents when we're looking at a public company like Strategy. So I pulled up the most recent quarterly filing again here, the one that was ended in September of 2025, the third quarter. And the first thing you'll see, of course, is the financial statements. But if you click or scroll down to the notes of the financial statements, we can get a lot more detail on some of the financial line items, including the company's debt. So if you scroll down to note number 5, here is where we see more details on Strategy's outstanding debt. Here you can see that all their debt are basically convertible notes due between 2028 and 2032. And if we scroll down a little further, Strategy's given us a really nice summary table that shows the exact maturity date for each series of convertible notes, what the interest rate on each convertible note is, and things like the conversion price, at what price would the common stock need to be for these convertible notes to convert into common stock rather than being debt. We also have something here called the holder put option date, which is basically the earliest date at which the holders of convertible notes can put these back to MicroStrategy, can force MicroStrategy to buy them back. So for the 2028 notes, that date is September of 2027. And then for these later dated or later maturity notes, we have dates out into 2028 and 2029, which would be the earliest dates at which the holders of the debt can force Strategy to buy them back. And so that looks pretty good. If you're thinking about, does Strategy have to pay down any debt in the near term? It certainly doesn't look like it. But can we get more detail on this debt? We actually can. Debt usually comes with a document called an indenture. If it's a bond, it comes with an indenture when the debt is issued that tells us all the terms of the debt. And these are hundreds of pages long with a lot of legalese. And I've read through a bunch of these, not only with MicroStrategy, but plenty of other companies over time as well. But they're very dense. And so we could also open up an LLM like ChatGPT or Gemini, Notebook LM if you want, and actually ask it questions and ask it to summarize terms for us. Now, we do need to be careful because we know LLMs can hallucinate and make up stuff, but these reasoning models have actually gotten pretty good. And I ran some recent questions through ChatGPT on Strategy's documents and double-checked them in the bond indentures myself, and they got it exactly right. In fact, I asked them to pull the bond indenture document and then summarize the key terms, and it not only got the right document, but it summarized the terms perfectly. And so here you can see a lot of the same terms we just saw in the table. But I also then followed up with questions like, can you elaborate on the rights that holders have to force MicroStrategy to repurchase the notes? And basically it came up and it said there are things like fundamental changes, which are, if Strategy is taken over by another company, or if Strategy misses a interest payment on debt, they would be in default and the holders could actually force them to repurchase the notes. But other than that, there's no mNAV mention, there's no mNAV trigger, there's no financial covenant trigger. And so really the only thing that would force Strategy to have to be forced to sell Bitcoin or raise cash to pay down debt would be if, something catastrophic happens or essentially the dates of maturity come due. And so that's a really important thing to know. Now, we also have, of course, the preferred stock that we also have to find out about. And so if we scroll down a little further in the quarterly filing, we'll actually find more details on the preferred as well. And Strategy really likes preferred stock. They like it because it doesn't come with a maturity date, at least not the ones that they've issued. These are perpetual preferreds, and so they do not have a maturity date the way that the convertible notes do. So Strategy has been selling a ton of these in 2025. And they're actually really excited about selling more in the future. And in fact, they are hoping to phase out convertible debt and just focus primarily on preferred stock. But they have a few different series of preferred stock. You can see here they actually trade publicly, just like the common stock does, under different tickers, STRF, STRC, STRK, STRD. Each one has slightly different features. For instance, STRC actually has a dividend rate that can change. It started at 10%, but now it's up to 10.75%. And STRK has a conversion feature where holders of STRK preferred stock can actually convert into certain amounts of shares of MSTR common stock. So if MSTR common stock goes up to 1,000 per share at some point, this will become a very valuable feature within STRK. STRD has something where essentially if strategy stops paying preferred dividends, they don't accumulate. So they wouldn't be on the hook. Strategy wouldn't be on the hook for past dividends, making up past dividends to STRD, but it would for the other types of preferred stock. So these all have different features, and I've actually done this in my spreadsheet. I've gotten all the details on these, and I calculate what's called the current yield, which is basically the annual dividend payment for each preferred divided by the current price of the preferred. So these have been pretty volatile this year. They were trading down a lot during this freak out over strategy a couple of weeks ago. And so some of these got down to like 65 or 70 cents on the dollar, where basically, take STRD, for example, if you had a $10 annual dividend and you were buying it at 65, well, you're effectively getting like a 15% plus yield at that price. And so that was very, very intriguing in a world of like 4% treasury rates and, 6 or 7% corporate bond yields. These yields look pretty juicy. Now, from Strategy's perspective, the preferreds, they have raised almost $8 billion of preferreds now. These annual dividends become a pretty big obligation. The convertible debt, the interest rates on those are quite low. So the annual obligation for all of the convertible debt is basically like $80 million a year. But the annual dividend obligation for the preferreds is almost up to $800 million a year. And this is pretty significant. So this is pretty significant for a business that doesn't really have much of an income generating operating business today. And if you look at the balance sheet as of the end of the third quarter, Strategy was only holding $54 million in cash. So if you have a couple $100 million of preferred dividend obligations a quarter, but you're only holding $54 million in cash, then you might have investors asking, well, how are you going to pay the preferred dividends? Now, it's funny because Strategy raised almost $20 billion through the first 9 months of the year via common stock, selling debt, selling preferreds, but they used almost every dollar of it to buy Bitcoin. So they have a tremendous amount of Bitcoin value sitting there, but very little USD cash. And the problem, of course, is that when the next preferred dividend payments come due, people are going to wonder, well, how is Strategy going to fund it? Are they going to go out and sell common stock? What if it's under 1 times NAV? Or are they going to go sell more debt or more preferred? Like, how are they going to actually meet these obligations? And I was actually getting pretty critical of Strategy in mid-November. I was like, why do you only have $54 million in cash on the balance sheet when you've raised all this capital? I get obviously having the Bitcoin exposure and buying as much Bitcoin as you can, but maybe you should have kept $1 billion or $2 billion of that $20 billion raised back for, future preferred dividends and convertible debt interest payments. And I was getting pretty upset. But then on December 1st, we actually had Strategy issue this press release, and because the stock was still trading above 1 times mNAV, they went and raised capital via stock. So they sold about $1.5 billion, and they said that they're going to hold this on balance sheet as USD cash. Their goal is to hold roughly 2 years of preferred dividend obligations in cash to try to soothe the fears of the market, but also it's just smart liquidity management, right? You don't want to be forced to raise capital at times of stress in the market. And so this is just a smart idea to be able to manage through the cycle. And I'm glad they did it. It's about 6 months, maybe 9 months too late, or later than it should have been. I guess it's not too late, but it's certainly later than it should have been. But it's better late than never for Strategy. So this will give them a nice cushion. So when the Q4 balance sheet comes out, they'll have a significantly higher cash balance that should hopefully soothe some concerns about how a Strategy going to meet the preferred dividend obligations going forward. Now, as we think about the options of, how is Strategy going to meet preferred obligations going forward, Strategy has a lot of ways to raise capital. This is something that a lot of the doomers miss. Strategy can sell equity when it's above mNAV. It could sell equity when it's below 1 times NAV if they really had to. It wouldn't be accretive to equity holders. It might create some dilution that causes some shareholder value loss, but it's something that could help them out of a jam if they really needed to. It's certainly not a preferred option, but it's something that they could do. They could also sell new debt to pay off maturing convertible debt. They could issue new convertible debt, and they've done that in the past where they issued new debt to pay off maturing debt. That's always an option. That's called rolling your debt. And they could also sell more preferred stock. The market for selling preferred stock to them seems to be open. They've been consistently raising more preferred stock. And so that's something they could sell to pay off debt or to pay different obligations. They could sell Bitcoin if they had to. Bitcoin's a pretty liquid asset, thankfully. And so if they had to sell a few billion in a pinch, they probably could. The market may not like it. It might push Bitcoin price down further. It might cause further NAV compression. But again, if it was a matter of life or death for strategy, they could do that. They could also halt the preferred dividend payments and save themselves, several $100 million a quarter. However, that would impair their ability to raise more preferred capital in the future. So this is not something they would want to do or would be likely to do, but it is a potential option, again, in a time of stress. They, I think, are looking at the option to potentially stake and lend Bitcoin based on the comments of the CFO recently. This is, I think, one of their best options to generate ongoing income. Today, at current Bitcoin prices, they've got like $58, $59 billion worth of Bitcoin that's just sitting there on balance sheet earning nothing. But if they have the ability to stake or lend out the Bitcoin on the balance sheet for, say, even a 4 or 5% annual yield, that could generate several $billion a year of income for strategy. And that could be used to pay preferred dividends. It could be used for convertible debt obligations or to pay down a convertible maturity. And so that is a really intriguing option. Strategy has basically said they're looking at that, but they're waiting for better counterparties to emerge in the staking and lending markets for Bitcoin. So I think they're really waiting for big banks like JP Morgan, et cetera, to actually get into the staking and lending market. That might be a 2026 or 2027 event, who knows? But that is something that strategy, I think, should be looking at very, very closely and is one of their best options for non-dilutive capital raising, in my opinion, or non-dilutive income generation, really. They've also talked a little bit about the potential to do BTC-backed derivatives, so maybe they sell puts or sell calls. I don't really love that option for strategy because it creates all sorts of complexity. What if Bitcoin price is ripping and they've sold calls? Does their Bitcoin get called away, or do they have to buy back the calls at a big loss? That's just something that I think gets really, really messy and makes things, more complicated, potential for more downside scenarios for strategies. So even though that could potentially generate income for them, I don't think it's the best option, but it is something they would potentially consider in the future. So there are lots of options here, as you can see, for strategy to raise capital, lots of different levers that can be used in different types of market environments. Now let's talk about some criticisms, obviously, of what strategies have been doing. I mentioned the big one for me was liquidity management, which they have somewhat addressed by the recent USD reserve, which is basically just raising some cash and keeping it on balance sheet. But, some of the other things that we could talk about include things like, the mNAV. It's very pro-cyclical. In bull markets, mNAV is rising, and that's good, I guess, for capital raising. But if you're also buying Bitcoin at the top all the time, that you're not really getting your average price to be, as competitive as you'd want it to be, right? What you really want to see strategy do is actually conserve some cash so that when a down cycle comes, they can buy a ton more Bitcoin at lower prices. Because mNAV is so pro-cyclical, you're always raising the most capital when the market is most bullish and prices are most bullish. But, as investors, we know we really want to be doing the opposite. We want to be buying when there's blood in the streets, when there's fear, when assets are being fire sold at low prices. And so you'd love to see strategy, instead of buying the top all the time, be able to buy more dips. And so I think what strategy could do to smooth that out is they could raise a bunch of cash when mNAV is high, but not buy all the Bitcoin right away. Conserve some of that cash the way they have with the USD reserve now, and actually maybe hold back and wait for down parts of the cycle to deploy some of that capital. And so that's something that seems very obvious that strategy hasn't done yet, but it would unlock more value for shareholders over the long term, in my opinion. I mean, that's exactly what Berkshire Hathaway does, right? They have a big cash balance and they go deploy, like in the GFC in 2008, 2009, Berkshire made incredible deals because it had cash on hand to be able to do that. And so when you have cash during times of market freakouts, that can create massive, massive value in the years ahead. So that's one thing strategy should do. There are still some unknowns out there. What does the preferred market look like for strategy over time? Will they continue to be able to raise preferred? What are the rates? What do the dividend rates look like on that? How levered do they get the balance sheet to be? How much preferred do they want to sell against the Bitcoin value? You don't want to be too levered because, again, then you have a situation where your obligations become so large relative to your Bitcoin value that it could become a problem if you haven't held enough cash on the balance sheet. So, there's some things like that I think are still question marks with the strategy business model long term. But ultimately, I do think, the doomers are wrong about strategy, being in a situation where they're going to get margin called or have to fire sale all their assets at once. As you can see, just looking at the terms of the debt, the terms of the preferred, and the options for capital raising, strategy, while there's plenty of valid criticisms, they're not in a situation where they're going to be bankrupt overnight. So now that we've basically dispelled the myth that strategy is going bankrupt overnight, we can turn to the question of what do we think strategy could be worth in the future? And I created this scenario table here, and it basically takes two inputs: what you think the price of Bitcoin will be in the near future, and what you think the mNAV multiple should be for strategy, for MSTR common stock. Today, it's about 1.2. And as we think back to what I was mentioning earlier about price to book multiples for banks, anything above 2 or 2.5, you start to get really, really high return on equity needed to justify those types of multiples. So I am trying to be as conservative as possible here and not put numbers like 3 or 4 or 5 times mNAV for strategy, because I don't think those are that reasonable of assumptions. But could strategy in a bull market especially get back to 1.4, 1.5, or 1.6 times mNAV? Sure. And if actually they can prove that they're really, really good at using their financial engineering levers over time, then yeah, it's very possible we could see higher mNAV multiples again. And certainly on Bitcoin price, you could imagine scenarios where we have much higher Bitcoin prices in the future. I'm kind of taking a medium-term view. I didn't include any crazy scenarios like Bitcoin 1 million. I do think that's potentially possible on a long enough timeline. But again, you could also be a bear on Bitcoin and then look at the scenarios here at 50,000 Bitcoin or below. So this table kind of shows you if you think Bitcoin goes to 200K in the next couple of years and strategy's mNAV goes up, you might be looking at a $500, $600, $700 stock potentially in these types of scenarios. So that would be quite a bit of upside from today's price, which is around 180. And I think it had gotten down to about 150 or 160 in the recent correction at its low. So we're talking multi-bagger potential. Now, I have to note, obviously, that this is just looking at a static analysis of the amount of Bitcoin that strategy holds today and also the current leverage profile of the preferreds and the debt. It's possible that strategy gets much more levered in the future, or they use financial engineering to get a lot more Bitcoin per share. And so those can obviously change this analysis. And so it'll probably look a lot different from this in a few years. But right now, this is a pretty good way to kind of see the potential upside or downside. And so clearly, you have to have a pretty bullish view on Bitcoin for this to potentially be a multi-bagger. And I am actually a bull on Bitcoin long term. I think it's a really, really intriguing asset. Personally, I've been involved since 2013 in Bitcoin, and I actually was tweeting about things like GBTC back in November of 2022. Again, doing my homework when everyone was being a panic, and I looked at GBTC when it was trading at an almost 50% discount to its NAV, and I was able to buy that stock at a single-digit price. And today, you can obviously see it's done very well since then. But back then, people were freaking out that GBTC didn't own the Bitcoin that they said they did, and all these things. And if you dive deep enough into the source documents, you figure out that a lot of people are just full of crap. But point being, though, I've been involved in Bitcoin and some of the stocks that trade around Bitcoin for a long while. And I think, MicroStrategy, I don't own the common stock today, but I do think in certain scenarios where it got low enough, I would definitely be a buyer. What is so interesting about Bitcoin to me? Well, a couple things. One, it's a scarce supply asset in a world of fiat debasement. I think we can all agree that deficits for G10 countries go out as far as the eye can see. Even efforts like Doge were unsuccessful in closing much of the deficit. And so I think if you're holding, USD, you expect to lose value over time against things that benefit from scarce supply and things like equities. Even equities that grow earnings over time will benefit against USD, and maybe things like gold and Bitcoin as well. And interestingly, also Bitcoin has the decentralized nature. It has the potential to be used in transactions between AI agents, maybe, who knows. And I don't necessarily think we're going to use it for transactions at Starbucks. I think it's been proven that it's not the optimal chain for that. But I do think it has become accepted, especially now in the institutional investing world, as a digital store of value. And so because more and more people are wanting exposure and you have a finite supply, there are potential blue sky scenarios out there for Bitcoin where could we be looking at $500,000 per coin, $1 million per coin on a long enough time frame? I think it's certainly possible. And a lot of people are bearish right now. They're looking at Bitcoin underperforming stocks and gold this year and saying, what's wrong with Bitcoin? But I think you have to take a little bit longer of a view because all assets, especially ones like this, will go through periods of volatility. So I am a believer in the underlying asset, just like Strategy believes in Bitcoin. Maybe they're more bullish on it than I am even. But I do find it pretty interesting. If you're a bear on it, obviously there can be significant downside scenarios for MicroStrategy stock. That's important to keep in mind. Now, how did I play it? So I actually played it via the preferreds recently. I actually went out and bought some STRD and some STRK when they were yielding around 15%. So in the recent freak out, I didn't buy the exact bottom, but I was buying here and buying into the low 70s and high 60s on STRD, for example, where I was getting basically a 14, 15% yield. So I was able to lock in a roughly 14, 15% yield buying at that price. and I'm very comfortable holding those. Now, those aren't going to have quite as much upside as the stock itself in the upside scenarios, because even though STRK, for example, has a conversion option, it's still not going to have quite as much upside as the stock itself in a true upside scenario for Bitcoin and for MicroStrategy. But I do like that I can lock in a current yield. It's going to be a lower risk, certainly, than the common stock, less volatility, most likely, once things stabilize. And so I added about, I think, 9% of my portfolio, my 100K public portfolio that I've shared on YouTube, now have a position in those two preferreds. And so those are just a nice solid asset that'll deliver a nice solid return, hopefully in the next few years. And I'll have to figure out what to do with the preferred dividends that I get back from that. What will I reinvest them in? But yeah, I could be an owner of the common stock at some point. Again, I think if it fell far enough, it would be a really interesting risk-reward situation. I like the preferreds. Even now, I think the preferreds are, kind of interesting with the current yields on some of them. But maybe we'll get an even deeper freak out and get to buy these at 20% yields. There's nothing stopping them in a market freak out from going to 20 or 25% yields. We certainly saw some crazy things like that in the GFC back in 08 and 09 that we were able to take advantage of at the hedge fund, buying some pretty wild stuff that still had downside protection. So maybe we'll get that with strategies preferreds at some point. I don't know. But ultimately, strategy is going to be very interesting. I think I continue to follow a lot of the companies that are crypto adjacent in stock markets because there is so much opportunity and volatility and misunderstanding. And it's this misunderstanding that I always tell investors you can use to your advantage. Don't be a panic-in. Don't depend on what you're seeing on social media. Go do the work for yourself, and you can find opportunities for amazing returns. So stick with me here on StockGeekTV, and I'll try to uncover as much of these as I can. If you have any questions or you want to have opinions that you want to voice about strategy or these preferreds or anything else related to crypto, let me know in the comments, and I'll see you soon, friends. Cheers.